Good afternoon, all. Camelback Trading 2724 and the pitfuturestrading.com. Coming to you this Friday afternoon, January 31st. There's a lot to talk about. Let me preface this by saying I had a good day, but I'm pretty pissed at myself because as well as I did money-wise, I did the wrong trades, which kept me out of the best trades of the day by far. And even though it was a good day, it should have been a day that's, one of the best of the year. So I might rant a little bit because I'm mainly ticked off at myself, but I am kind of tired of this news thing being the big thing and the reasons why everybody says the market's doing what it's doing. Okay? Because to me, it's all bullshit with that. So let's start. We got to go back. Here's our high, right? We made a high. We had excess. Then the virus stuff started coming out. We gapped lower, but we filled the gap that day. Next day, we gapped higher. We end with an outside day down with 4 sets of single prints. Oh, God, it's all because of the virus. No, it's not. We had excess here. We failed at the top, came down. You can't have it both ways. You can't say the market's down because of the virus, and you can't say the market's up because of the virus. Can't have it both ways. So we shouldn't have it either way. Use what the market's telling us, plain and simple. So what did the market tell us? Well, we gapped lower on Monday, tremendous gap, only to have it fill the next day in an hour and a half, only to have it gap higher the following day on Tuesday. But what was the market telling us? Neither day we can close inside the 24th day, which was the outside day down. That's market-generated information talking to you. Forget the virus, okay? Yesterday, another perfect example of absolute mindless machines that have no idea what they're doing. Another huge gap, trade sideways most of the day, only to have it rip up for absolutely no reason. Everybody's saying, oh, it's because the World Health Organization said everything's okay. Okay, all right, fine. If that's your reason, again, bullshit. If that was the reason, then why were we down 2% today? What changed? Nothing. Nothing changed. This was mindless machines taking this market up yesterday. It's disgrace. It's absolute disgrace. So what happened today? Well, since there was no reason for this market to do what it did yesterday, it just took it all back and more on some really good volume. Why? Because the tone of the market has changed. We went from all time frames up to balance in the weekly, down in the daily, and a monthly, although it is still up, has some really good excess on the upside. We are still one time framing up for 3 months, but that's not going to be something that holds for long either, I don't think. All right, as far as today, I said this morning's video, well, because they ripped it up yesterday, there should be buyers in the price probe, single prints, price spike. I had a very good day, very good time frame trading it from the long side in A. Based on those things. I had one last long that was actually hurting me, came back, and then my machine froze. I couldn't get out of it. By the time I did, it cost me some money. But that, no excuse, neither here or there, what happened afterwards. So here's what should have been done, especially for people who are learning out there. I did say earlier, right before the market opened this morning, if we fail above A's high in the price spike, you're going to go test POC, and then you're going to test the low today. And why did I say that? Because I said we've had nothing but a void and a vacuum in price. I said this I think it was at least 2 weeks ago when we were trading around the highs, and I said we still have a vacuum down to 325, 322 level. Okay? Well, they came to fruition the last couple of days. So, number one thing I didn't do, after having a good A period, I failed to realize when B opened, and this is the second time now, We had a highest accepted price. And what do I mean by that? There's a lot of times if the market, you either have the lowest accepted price or highest accepted price. When A closes and then B opens, and it goes either a tick above or below basically where A opened and never gets above it, that's a highest accepted price. That told you right there that something was wrong if you were long. And it told you you should probably get short. I didn't do it. I didn't recognize it. I didn't do it. But even that should, even if I missed that, the fact that we got under A's high should have told me to get short. The fact that B took out A's low and started one time framing down, I should have got short. Why didn't I? If I had an answer, I would tell you. If I had an answer, I would have been short. I just didn't do it. So what happened? We went down. B, C, got to the day's low. D, 2 sets of single prints. Okay? We had 4 sets at one point, just like we had last Friday. This time we had 4, but we end with 2. So I missed. That was one of the best trades of the day. Either selling it, shorting it at the highest accepted price, shorting it when B took out A and below A's high from yesterday, shorting it when we had single prints in B. I had 3 opportunities, didn't do them. We continued to go down, have another set of single prints here. Now again, I told you, I had a good day. But it was mostly from the long side because after I had a very good A period, I did longs because then you get in your head, well, man, I just missed a move from 327 down to 322.60. Man, I'm not going to start shorting it here. So I did do a bunch of calls when we came out of balance and then came back into the range, started taking some call positions, and they worked. Again, they're not the right trades. The other trade that should have been taken and would have been a very good trade, and I said this on my Slack channel and in the chat room I'm in, I want to sell an afternoon rally high. I said I want to sell it between H and G's high. I was expecting a relief rally. I had taken a couple of longs because each time we came back in, I was expecting some kind of relief rally before rolling over again. It got exactly to the spot I was talking about. And just like I told you, I don't have a reason why I didn't short it here. Well, I didn't short it here either. And we went from 323.23 down to 330.74. So $2.50 move again to the downside. I did not take. Those were the 2 best trades of the day. Short here, short here. Plain and simple. All right. Destinations for Monday. Now, we also had a price spike when L took out I's low, but we closed above I's low, so that's taken out of the equation. But we do have the price probe. So even though we close, the price probe starts at L's low, which is 321.51. Now, right now, after hours, we're trading 80 cents higher than that. But we don't know if it's accepted or rejected until Monday's opening, right? Because I only use it for regular trading hours. Then, above the price probe, we have the afternoon rally high of 323.23 from today. Then we have the 2 sets of single prints. First one started 324.35 and get filled at 86 cents. And the second one starts at 324.95 and gets filled at 325.43. Then above that, we have the highest accepted price, or HAP, H-A-P, at 326.04. And then we have today's high of 327.17. For the downside, we have today's low of 320.74, which is now a weekly low. So we closed just almost exactly $1 above today's low, which is a weekly low. Then we have, and these are very important levels I'm giving you right now. Because the way I was talking about 325, 322 being important, well, these are very important because they're all within 60 cents of each other, and there's 2 weekly lows and a monthly low. So there is a goal line defense for the bulls. So you have 320.74 weekly low, 320.36, which is this month's low, 320.15, which is a weekly low. Then we have one single print, a single print, 320.11 from December 19th from last year. I'll give you a couple of more on the downside. 319.75 daily low, 319.53 daily low Paulo, 319.48 daily low, and then 319.17 weekly low, and then filling the gap at 318.67, a 50-point gap from December 16th. So incredibly, even though this market took a real big beating this week, and by the way, the entire month of January was wiped out. We closed last year in the SPY. We settled at 321.86. We closed today at 321.73. So 21 trading days or whatever it was, we closed down 13 cents on the month after trading as high as 333 or just about 333. So we just gave back $11 in the very, very recent trading days. Okay, now, charts. Again, we have gaps in all 3 time frames incredibly. Now, the monthly. Yes, we are 1 time framing up for 3 months, but boy, that candle looks pretty nasty. We still have the gap below. So the fact that we're only $1 above the monthly low is cause for concern, because if you take that out, then all 3 time frames, which were at one point all up, would be either in balance or down. And if you take out this month's low now, the next month's low is 307.13, so there could be some more pain. Weekly, I'm still keeping it in a balance because we didn't take out that weekly low. 4-week balance, all-time high, and then that weekly low of 320.15, I believe it is. Or is that the week? Let me just see. I'm sorry, 320.36. So the bottom of our balance is actually the monthly low too. So this is such a very, very important area for the bulls to hold. It really is. Because if they don't hold it, you're going to get some more downside. Again, the failure at the trend line yesterday. Now look at this today. And here's one other trade that I could have taken, forgot to mention it, and I didn't do it. Look where we traded today, late in the day. We traded to the 50-day moving average, basically to the tick, which was right around 320. Well, the low today, 320.78, right around there. Well, we closed at 321.73. We traded even higher than that. So I had a 95-cent bounce off the 50-day moving average in 1 minute. So there was a trade, right? You got to put things in context. We were down 2%. You got to a very visual area where you figured buyers would be at least the first time. And they were. So that would have been, that's one long play that I would have taken, that I would have said, it's not wrong for taking that. That would have been a nice, quick buck on whatever amount of options I bought. So I missed a lot of trades today. I had a good day, but I'm not happy with myself. I can assure you. The daily now I have it is down. 1 time framing down 2 days. Failure at the trend line, starting in October all the way up. Failure there 2 days ago. Every rally got smacked in the face. Now, we did defend the 50 the first time there today. So now it remains to be seen what happens next week. I think, obviously, those levels I gave you around the 320 level are very, very important. If the bulls don't hold those and you take out this month's low, so you stop the 1 time framing up in the longer term, you might get some relief rallies, but I think longer term, you're heading for some more pain. If they're able to hold the 50 and those levels around the 320, maybe you can get at least back into balance on the daily and go from there. Anyway, I hope you had a good day trading. Have a great weekend. Enjoy the Super Bowl, and we'll speak prior to the opening on Monday.